Robert Bugbee, come on down. Bob Burke, welcome.
See ya.
What's up, Paul? Thanks, man. You guys don't need an introduction.
No. Sure. Thanks.
I know Robert has 1 year, but same reason I did. I lost one.
Robert had to finish that last trade. Well, sitting to my left are two people who I don't think need much introduction, Bob Burke and Robert Bugbee. They are icons in this industry, have been around for a long time.
Paul, can you pull it in?
Sorry. Speaking to the microphone. I will say that typically I don't do the moderating here. I've done a few of the panels. So when we sat down to do this, I did the obligatory call with Bob and Robert to go over the topics and try and figure out what we're going to talk about. And about 3 minutes into the conversation, I realized that the call was a disaster because they are just way too nice to each other. They were just complimenting each other, what wonderful people they were and how successful they had been, which all happened to be right, but frankly, I don't think really made a great works for a panel. So we decided just to end the call and move on from there. So we've done no prep with Robert and Bob, but that works because they are open books and we appreciate that about them. I think where I'd really like to start this in terms of, just given their background and the nature of this panel is asking them both in terms of, just right off the bat, you guys see a lot of deals, you see a lot of opportunities. Tell me, give me 3 characteristics of a deal, of something that has to be included in a deal for you to become interested in, and then also tell me one thing that if you see it within a deal, you just go pencils down and say, forget it, too much, not moving forward with this. Bob, you want to start?
Thanks, Paul. First, when I woke up this morning, I said, should I wear a tie? And then I realized it was Robert and Paul, and I'm like, I don't think they own a tie. So the elements of a deal, it's if the market's too high, I don't want to invest. It's just, if it's too much downside, we can only control the entry point and the exit point. So if the entry point's too high, I'm like, there's a steep cliff. And we've all seen those graphs, and it's completely uncontrollable. We all know there's the order book and everything else, but that's the number one thing for me. And then if it's really low, it's time to buy. It's fairly simple. You just got to be patient. So asymmetrical risk is my primary issue. And then any sort of reputational or regulatory risk that will sink me or my investors is off the table.
So in terms of, but in terms of like, as a deal comes on your desk, what are the elements? So obviously you said market dynamics, but what are the other elements that you really are looking for to make sure it's something that you're going to spend time on?
Asset class. I deal in tankers. I feel comfortable in tankers. If I have a problem, I can call someone I know. I can think through it. I used to work on tankers, every element. And on the container or the bulker side, if I did anything, I would absolutely need a partner, because I know how important it is when you get in a jam, and our business is made of managing problems like every other business. I want to make sure I can work through it. I can't BS my investors and say I know everything about cave size when I don't. So, the elements are, and then the asset class and who made the assets are important. What the pedigree of the assets are. I've always bought secondhand assets, so I don't buy from people that don't treat their assets correct.
I think the first thing to look at is whether you can afford it or not. So that may sound sort of silly, but are you at a time in your company's career whether you're actually looking to invest in things, afford to look at things? And I think you kind of have to guillotine things pretty quickly. So that for a lot of the time if you're in shipping in a public company in the last 30 years, you shouldn't be buying anyway, regardless, because you may not be able to afford to really do it. And so that's the first guillotine. Then it's whether or not you're looking at something that creates a short-term gain, 2-3 years, or whether or not it's something that's more strategic, something that you can either build on or you're adding to something that you already have, because then you're going to test it on its a longer term period with more chance or more time to get it right. A short-term position is kind of difficult because you have to gauge whether the more important thing is before you work out how to buy it, you have to work out how you're going to sell it. And that's normally the hardest thing.
And so when from where you sit, are you predisposed to be looking at things for longer term or shorter term, or you're indifferent so long as you can answer that second question, which is, if I actually end up getting this thing, how am I going to get rid of it, or is it just accretive to the overall business?
Yeah, we're indifferent. I mean, if you just take Scorpio Tankers, forget the private side, but Scorpio Tankers is, we bought a set of VLCCs back in 2014, 15. We didn't even take delivery, and we haven't owned them for more than a year, and we flipped them.
That's right.
We took a very strong position in LPG. And we chose that rather than go it ourselves, we consolidated into LPG, into Dorian. And those are various things. From the private side, we went in and we made a big container order from the very big, large containers back in 15, 16, and flipped that to EDAN offer within 8-9 months. And that was because we got the first question wrong, actually. It was lucky wrong. Yep. We thought we could afford it, but we couldn't. And then we managed to get out of it.
So, and Bob, from your perspective, as you go into these investments, how much time do you actually spend thinking about the exit, as you're going in, or are you looking at the primary market fundamentals, figuring that it'll work itself out?
It's really just the market fundamentals. If someone says, well, you can see a high side here, you can rationalize a high side, then I have no interest. But it's really, what do I need to believe to make this investment? Do I believe MRO is going to be at $30,000 a day for the next 2 years? I don't. Doesn't mean they won't be, but there's just too much that can go sideways that can turn that into $25,000 a day or 22. And the way the market is now, if you own a bunch of ships on the tanker side anyway, you have no reason to sell. You're cash rich probably. If the market goes down 20%, well, it's still at a high level. But if I buy right now, so the sellers are naming high prices because they're relatively indifferent. As a buyer, though, if I buy and the market goes down 20%, it's a disaster. So the dynamics, the dynamic between buyer and seller now are not my favor as a buyer. So it's not a good time to get in. And the height of the market right now is not my favor. It's somebody who looks for an asymmetrical risk profile that favors me. So that's another reason not to get in. So, and I was in Dubai last week, and I had 2 really good friends who are S&P brokers who've done a lot with me, and they've said, do not buy any tankers right now. So they're in the business of transactions. So that all leads me to believe, as much as I was in Dubai. It's a tanker week. It's really exciting. Everyone's having a great time. It's party. The rates are great. And I don't own any ships. I'm like, I want to be part of it. I really want to do this. Why aren't I in the game? Well, I'm not in the game because I sold everything a couple of years ago, and that's great. But it's easy to get caught up and say, I should just buy something just to get back in, or I should time charter something in. But, they're easy to buy. As Robert said, could be hard to sell. And, I don't want to live with a problem for the next 5, 6, 7 years. Again, we've all seen those graphs where everyone's up here and we've lived through it, and that's not the side of the trade I want to be on. And again, it doesn't mean I'm wrong. It could be 30 a day for the next 2 years.
So I could take you into live discussions that we had 3-4 weeks ago when we announced that we just announced that we ordered or signed LOAs for 2 option 2 VLCCs. So that conversation, that decision was the following. First of all, the price that we could get those VLCCs for and their delivery date was such that we felt that it was better to have our expression of confidence in the VLCC market in the steel, in a backwardized curve, than in our investment in DHT, which we considered at that point was above a net asset value, and those assets were very backwardated. So the front of the curve, right now the new building is cheaper than the 4 or 5 year old even vessel in the water. So that sort of got a first tick. Then we looked at the situation, and it was, look, the VLCC market can go only 3 ways. It can go ballistic, like the market did in 15, in which case, maybe it's a short-lived investment. It can be steadily strong over the next 4 or 5 years, and we'll take delivery of them, and it'll provide a good return. Or the VLCC market, despite how confident we are of the shipping dynamics, might completely fall apart over the next 2 years, and values might crash, and the curve suddenly goes into contango, in which case that's like a bridgehead to then building a proper business line.
But it was interesting because that was back in the OMI days, right? Wasn't that the market dynamic when you decided to sell? The same,
Who's going to buy us?
Well, that's the problem, right? Liquidity. Sorry, that is the
who's
problem.
Going to
Liquidity,
buy
right?
us?
Yeah.
In the 2007, OMI was great. OMI was nicely smaller than TK, OSG, John Frederickson. The German companies were firing on all cylinders. We had 11 people bid for OMI.
Yeah.
And Robert's in a very different business than I'm in. Robert's in the business, or public companies in the business, of providing a trading platform or an investment platform for investors. So they always have to build their fleet. They always have to be in the market, renewing their fleet. And there's a vast difference between selling 15-year-old ships or 14-year-old ships and then in the same market buying new ones and improving your age profile, compared to what I do is I buy and sell ships opportunistically. So it's different analysis.
So both of you all have pretty strong views in terms of what you look for, how you look at this stuff. Do you have mentors that have helped you refine these views, come to these views, and that have helped you get to where you are today?
Yeah.
Who are they?
Been fairly lucky.
Who are they?
Very lucky. Well, I think you can. Some of them you don't actually. I've never actually really known, right? But if you see those very, very successful private Greek owners, let's say what I would call the gods of the industry, and they have this absolute discipline and skill of being able to buy when the market's in absolute crisis, and they always let something out when the market is high, and they run super efficient, knowledgeable operations. And I think that it's taken me in a public company 40 years to get to that position where now we're net debt free.
Yeah.
And we can act like one of those people. But time will tell whether we have the discipline that those mentors.
But you're not going to give me a name like Nancy Pelosi that we can just go out and track.
I'll give you other people. George Economy.
Oh, there you go.
Right.
Yep.
George is. George can show you that. George Economy, John Frederickson, both of those two I've known.
I do remember
well.
some dark nights in the corner with Tor and John.
Yeah, and both of those two showed this sort of incredible element of stuff you couldn't learn in a book.
I think it's like a lot of things in life. I mean, you watch the people who are successful and what they did, and then you watch some other people and you're like, I don't want to be that guy. That was a stupid move. And it could be in shipping, it could be in friendships, it could be in marriages, it could be with their kids, it could be any of these things. And, I just think like Anything else is accumulation of watching a lot of people over a long period of time and admiring the ones who were successful, and really noting who failed and why they failed and what it actually cost them and why they took that risk. That's it.
And is there, as you look at these deals, as you go into these deals, is there one person that you count on to be by your side to help you get through it and to do it? Gary Vogel used to use with me the sort of the lifeboat analogy. If I put one person in the lifeboat, who would it be? But Bob, let's start with you. Is there one person, if you're gonna start working on a deal, you want them by your side to get it done? It could be a lawyer, it could be a banker, it could be anybody. If you don't say me, I'm going to be pretty disappointed. But
I was going to say you, Paul or Robert.
Aside from
I have a fairly good bench. It depends upon the situation. I don't have a name now.
Robert?
Oh, you definitely want Lady Luck.
Yeah. Okay.
Yeah.
There you go.
Definitely.
Yeah.
Absolutely. I'm with you 100%.
I would have said Hugh Crooks, but he's left.
Yeah, he did. He abandoned you. So Bob, you have all your deals have been private, I think, right?
Yeah.
Yeah. Okay. Do you just not like the public markets? Is there something about the DNA of those deals, or something about it that you just?
No, I like the public markets, and I've looked at different things, and I've tried a couple of things, but it didn't work. And
what's the constraint?
The hard part about the public markets, well, the listed companies have to be at or premium to NAV. And then you need to be able to grab a set of assets at a fixed price for long enough to get your deal done. And then you need to sell those into the market at some sort of a discount to the peers, which makes it difficult unless I own a bunch of assets personally, and the price I'm willing to pay to have a public vehicle is to let some of those out into the market at a discount, and then I can build on that. But starting with no assets and trying to talk to someone into lending me those assets for a period of time at the right point in the public markets is challenging. Doesn't mean it can't be done. So then I have found it's easier to go to an investor and say, let's just do this privately. So I have nothing against them at all. It's just, and it's also a very different business. Building a platform is different. And there are also ways to say, I'm going to buy these 10 assets and put a ring fence around them, and they're going to be liquidated. So it's more like a liquidating trust, if you will, than a public company. It just happens to be listed. And that'll trade differently than a perpetual vehicle. So I have nothing against them.
You just don't have them.
I just don't have one. No.
And Robert, from your perspective, you sort of, I think obviously you have the private and the public side, but then you also have another interesting side that I've seen. That is, it looks like you're trading the options and things like that. And so you have a very different perspective on these things. So as you look at this stuff, in terms of the dynamics for public, private, and then just trading, where do you see the most opportunity? And if you were to look back over the last 10 years, 15, 20 years, ultimately, which one of those types of companies or trading has proven to be the most successful?
I'll pass on that.
Okay. Okay.
I've been lucky. Lady Luck's been good.
I'm not sure if I'm allowed to do that. I think it, but so. But
you
then,
can have a follow-up question. That's not
let's talk about capital, because I do think it's relevant in terms of how you guys fund each other. Because I think Bob, from your perspective, you get tremendous support from the private capital markets. Obviously, you've spent a lot of time fostering those relationships. There's a tremendous amount of trust there. But do you go to the private capital markets because you like that dynamic, you like that construct, or do you do it because that's where the money is?
That's why I rob the banks. That's where the money is, right? I think the best way to make money in shipping is to be Johnny on the spot with the checkbook when someone really needs to sell a ship. And I was fortunate enough to have Riverstone as an investor who put up a few $1 million to enable us to do that for a few years. And once that was done, we had other groups of PEs funded, other groups of PE that would fund similar types of structures. And we were also have the credibility to talk to different groups of ship owners and grab their assets for some small amount of time to get them funded. So that was the bridge.
So it's a tremendous amount of capital. They can provide flexibility when you're in there and doing it. But the flip side of that is, I assume the flip side of that is, it's the old golden rule. Those with the gold rule. And so when you go to make those decisions to sell, not sell, do these things, you've got to ask somebody and you got to talk to them and convince them it's the right thing to do. Is that something you're comfortable? Obviously, something you're comfortable with
On the sell side.
On the sell or buy side.
Yeah, on the buy side, it's not that difficult on the buy side if the opportunity is right. We went to the KGs when they were really bad, and we got two 15-year-old Suezes for $20 million with an option for 2 more 90 days later, and we got that because we were able to raise capital quickly. But it was dicey, and as it was, one of the PE groups fell out because they invested in Argentina on the wrong day. So we had a scramble, but we put the deal together. On the sell side, generally, I think you'll find that PE groups, if the management says it's time to sell, are not going to fight the management group, because usually the management group has a vested interest in sticking around and collecting their fees. So the upside has to be enough, and the carry has to be enough and the market has to be good enough to sell.
So, but they're good people. They're the good people. You like working with them, and you like that environment. So, Robert, my question for you is there a single person that Bob has taken money from over the last 15 years that you would willingly put on one of your boards?
No.
And why is that?
Because they don't think the same way as we do.
Yeah. So it's the old shipping is an island, and
They're tourists.
They're tourists.
Yeah.
Yeah. So do you think that makes it more difficult for these? Do you think it makes it more difficult for these private equity funds and capital funds to be successful in the market? Because they are. I mean, ultimately, those are the folks that are sitting on these boards, right?
Yeah, but Bob's got special talents, right? He can handle these people.
Bob's a charmer. We all know that.
He has a gun, right?
It works for Bob.
The PE groups, the problem with the PE groups is they think they're. I explained this to my nephew. He followed me around the market for a little bit, and then he wanted to be in PE. I said, you go into a PE room, and those people are really, 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 really smart. So to make money there, you got to be one more really. I said, you go into the shipping room, and we're really smart. Not really, really, really smart. So if you want to make money in shipping, you just have to be really smart and a little bit fortunate and have some game. So you go to the PE groups, and they all think they can game out what this market's going to do and the graphs and the rest of this, and they want to control the negotiations. So by and large, it's forced them to go into new builds, and they all failed. And it's really hard to have those guys download the approval process basically to me. And what they don't believe is that if I tell them, we need to commit to this ship tomorrow, and it's $50 million, they simply don't believe that the seller will wait a couple of days for them. And I'm like, there were 3 other Greeks lined up who are going to buy this ship unless we commit. So it's really against their DNA to download that much authority to a management team on an asset that hasn't been looked at physically yet. So that's the trick.
Bob's trying to run out the clock. So when you sold the Ridgebury tankers, was that your decision or theirs?
It was mostly me and Hugh, me and Crooks. We said there were some constraints on some of the funds that were there for a while.
Rob, because we're running out of time. Robert, did you look at the deal when he sold?
We sold individual tankers.
I know.
Yeah.
But did you look at the ships?
No.
No? You didn't want to bail them out, or?
No.
No. So just out of curiosity, and how do you think? Any sense of how that worked out? Had it not been for the constraint of the funds, would you have held on to the ships?
Maybe a couple, just to keep our fingers in the market, but
because I envisioned a merger of Ridgebury tankers into Scorpio, and do you have any sense of what that would have done what the returns would have been?
No.
Thank you, Paul. It's been great.
30% from the day you from the day you sold into Scorpio tankers. So I think you both did well. You did well for your investor. Obviously Scorpio tankers has done extremely well, and I think the success speaks for itself. So we are out of time. I did not get a chance to talk about Bob's investment in bars or Robert's investment in Jones Soda. both of which I think, frankly, are highlights of their investing career as well.
Appreciate it.
Thank you, Paul.
But thank you for your time. Appreciate it.